Inflation is higher than 2008. Interest rates are several hundred points above 2008 levels. But Biden says the economy is good. So why is it that gold nearly hit its all-time high this past week? Hey everyone, welcome to Campbell's Coins. The gold price chart over the last 50 years has always fascinated me. Right before we head into some economic issue, at any given point in time, we start to see gold's price start to climb beforehand. It's almost like gold is warning us that trouble is ahead. The gold price is like the canary in the coal mine. When the gold price starts to go up, people are sensing that things are not great. For the majority of U.S. history, the price of gold was fixed. At first, it was $20 per ounce. Then, in 1933, President Roosevelt reevaluated gold to $35 per ounce after confiscating most of it from the population. It wasn't until 1974, when gold was made legal to own once again in the United States, we were able to chart its price in the, quote, free market, unquote. Since 1974, gold has been on a tear upwards, and for the most part, hasn't really looked back. So one of the things that has really interested me about the gold price is everything that's followed since 2008. When we have an economic crisis, right beforehand, we start to see the gold price start to go up. You can see this in 1979. You can see this in 1988, 89. You can see this in the early 2000s, and then you can definitely see it from 2005 all the way up to 2012. But something happens after every single point of these times, is it drops back down. And we are told that everything is great. Well, if that is true, why hasn't the gold price dropped? There are many factors that cause a high gold price, but I would argue the biggest one is fear. Fear drives the price of gold up more than anything else. And this is because people rightfully view gold as a safe haven asset. The system was broken in 2008, and the gold price reflects this break. If things improved at all, why didn't the gold price fall back down to its early 2000 levels? After gold's breakout in 1980, the price settled to an average of $400 an ounce for nearly 20 years. Yes, for 20 years it was essentially flat. And sure, there was some upside and some downside, but the average price, I would argue, was around $400 per ounce. It wasn't until 2005 when gold broke $400 and never looked back. By the way, the 2008 economic crisis wasn't really a surprise to many people, and that's why gold was growing so much before leading up to it. Then in 2011, gold hit its new all-time high of $1,920. October 2012 was the beginning of gold's slide. Did it drop back down to its pre-2005 prices? No. It fell, but bottomed out around $1,100 before bouncing back big time. The price averaged $1,300 from 2013 to mid-2019, and then it broke out and has remained above $1,600 since August 2020. Gold hit its new all-time high in March 2022 of $2,080. It dropped to the low 1630s in October 2022, but has rocketed back above $2,000 in 2023 and held pretty steady. It wasn't until last Friday that we saw it drop 2%. But still above 2,000. We are dealing with bank bailouts with whispers of more to come. We are involved in a proxy war with Russia. Those leaked documents are fairly insightful into how we've been lied to about the Ukraine war. Is the economy strong as Biden states? That's what I like about gold. Gold is a BS indicator. If its price is up and your country's leaders are telling you everything is fine and the economy is good, more than likely being lied to. It calls BS to every politician and leader in history that has said things are good. And what is gold if not the people buying it? People understand that things are not good. One reason of many prices remained above 2008 levels for so long. This brings us to the sponsor of this video, Uranium Royalty Corp. And why is uranium such an interesting investment during these economic times? You stack gold for many reasons, but one of the main reasons is because it's an incredible hedge against inflation. Commodities, especially energy commodities like oil, natural gas, and uranium, are even more inversely correlated with the dollar weakness. Inflation is really sensitive with their prices. Uranium's price is currently at $50. Just 9 months ago, it was $26. These figures are incredibly low considering its all-time high was $137 in June 2007. When uranium moves, it's more intense because the global supply is so tight. Let's take silver as an example. If the price of silver moves from its current price to $60 overnight, the market would be flooded with physical silver as everyone and their mom would be selling off silver to cash in on the rising price. One would think this is the case with other items like uranium, right? Wrong. The supply out there is not enough. To bring a shut down mine back online would take an estimated 2 years to be back in full production. Starting a new mine would take even longer. And this is just to mine it. Refining it further into nuclear fuel is another year-long process. So if the price hit $60 tomorrow, it wouldn't change new mine supply at least for 3 years. This is why we have seen such extreme price jumps. From 2001 to 2007, uranium's price rose 3,500%. Countries all over the world are moving towards a green energy future. I've discussed this numerous times before in regards to silver and while it's vitally important for a green energy technology. Uranium is a critical resource for a green energy future. With the Biden administration pushing heavily for a green energy revolution, one has to look at our current infrastructure to see if this is feasible. Specifically, to the United States, there isn't enough wind, solar, and hydropower to support this move. More infrastructure would have to be built to support an all-electric society. With the Russia-Ukraine war, European countries are starting to figure out maybe it's not such a good idea to rely on another country for my energy. Switzerland is considering banning electric cars because they import their energy from Germany and France, and those two countries are experiencing an energy supply crunch. I'm sure they are looking into how to become more energy independent. Japan is bringing back nuclear power to protect its energy security. Nuclear power is incredibly clean, and it's the greenest option for a green energy future. The total waste created with nuclear energy is incredibly small compared to other sources, and companies are coming up with ways to take nuclear waste and wringing out every bit of energy from it so that none of it goes unused. Unlike solar and wind power, nuclear power plants don't rely on the weather or the time of day to produce electricity. With uranium at one of the lowest prices it has been, and with the demand for a green energy future and increased demand for electricity, uranium is on the brink to break out. They expect global demand for uranium to double by 2040. Uranium Royalty Corp is a true pure play on uranium, which is 20% owned by Uranium Energy Corp. Pure play means they focus entirely on uranium instead of getting distracted with other sectors. Uranium Royalty Corp is actually the first and the only company to apply successful royalty and streaming business models exclusively to the uranium sector. And as with any investment, it's important to know who runs the company and other investors involved. Mr. Amir Adnani is the chairman of Uranium Royalty Corp. Other shareholders include Altus Resources Incorporated, Mega Uranium Ltd, Marin Katusa, the KCR Fund, Extract Capital, Rick Rule, Sprott Global, and Commodity Capital. Canadian billionaire investor Eric Sprott, Rick Rule, and Marin Katusa are among the world's most renowned commodity investors and experts. Another connection between Uranium Royalty Corp and Uranium Energy Corp is the presence of Mr. Scott Melby, who has been the Chief Executive Officer and President of the company since October 2019. Uranium Royalty Corp is focused on gaining exposure to uranium prices by making strategic investments in uranium interests. Generally speaking, how this works is metal royalty and streaming companies provide funds for mines in exchange for future payoffs. The royalty entitles the holder to a fixed percentage of the revenues, less certain expenses called royalties, generated by the mines, and a stream entitled the holder to a portion of physical metals produced by the mines. Streaming. UROY is invested with some of the largest uranium producers on the planet. This includes a 3.8 stake in Yellowcake, a company that has a long-term supply agreement with Kazatomprom, the world's largest uranium producer. This supply agreement enables Yellowcake to purchase up to $1 billion, including existing purchases of uranium from Kazatomprom over a 10-year period. Uranium Royalty Corp's royalty portfolio can only be described as world-class. Part of this portfolio is the Cigar Lake mines located in Saskatchewan, Canada, whose joint venture partners are currently Cameco, UROY, Canada Inc., and others. Cigar Lake is licensed to produce 18 million pounds of uranium per year. Historical production of 93 million pounds of uranium has been recorded since Cigar Lake went into production in 2014. The McArthur River mine is also an essential component of Uranium Royalty Corp's royalty portfolio. This mine is currently owned by a joint venture between Cameco and UROY. McArthur River is licensed to produce 25 million pounds of uranium per year and is expected to be the first Cameco's operations to restart after Cigar Lake based on market conditions. Bottom line is, UROY has positioned itself strongly in this sector due to the low price of uranium and the cost to mine uranium. They own 15 royalties, with 2 of these resuming production, which will result in generating income for UROY very soon. Another feature I really like about UROY is they have around 133 million in liquid assets, and they actually hold physical uranium, around 1.5 million pounds of it. They are in the driver's seat to be the go-to funding partner for new mines and royalties. When it comes to the United States, the US imports over 90% of what we domestically use. In fact, the United States is the largest consumer of uranium, going through about 50 million pounds per year, but we don't produce anywhere close to that. Much of the uranium is imported from Kazakhstan and from Russia. And this is a national security concern as it puts too much reliance on other countries. Uranium Royalty Corp and Uranium Energy Corp keep pushing the United States government to make sure that Texas, Wyoming, and other states could operate and mine independent uranium so we don't rely on foreign-produced uranium. There are so few uranium producers here in the United States that the few companies that have this market cornered have a massive opportunity in front of them, especially with Biden pushing a massive energy independence infrastructure initiative. And to give you some perspective, there are around 440 nuclear reactors in the world. 94 of these reactors are in the United States. Each of these reactors consumes roughly 500,000 pounds of uranium per year. Some are more, some are less, depending upon the size. For those math aficionados in the audience, this comes out to a global consumption of around 220 million pounds of uranium every year. World uranium production is nowhere near that number. This leaves a deficit year after year. Many countries are in process of building new reactors. You have a supply stretched thin with growing demand, price for the metal, a small amount of miners around the world, low supply, and unrealized potential. All of this is a recipe for massive growth. The uranium market has enormous potential, and Uranium Royalty Corp's direct exposure to the rising uranium price and nice additions to its portfolio have positioned UROY brilliantly to great upsides. Aside from silver, uranium is a market I see with so much positive potential. It's hard to imagine a better play based on all these things going for uranium. As with any investment out there, please do your own due diligence to see if it's worthwhile for you. Factor in timing and pricing to see if it's a good time to jump in. I'd like to thank Uranium Royalty Corp for sponsoring this video. Your time is your most precious asset, and I appreciate you spending it here with me. Thank you all for watching. This is Campbell's Coins, and that is my 2 cents.